Well, as we chat today, we're just a few weeks away from the ABD Conference and Expo, and one of our presenting sponsors, Tabitha Holliman. How are you?
I'm doing well today, Neil. How are you?
Fantastic. And Tabitha runs a company called Holliman Strategic Advisors, and that sounds like money to me.
Yes, very much so. Very money focus oriented. Yes.
So there's an old expression, cash is king. Do you believe in that?
I obviously believe in that. As a business advisor with the background of accounting and taxes, a lot of things we don't focus on as accountants. We don't focus on cash flow per se. We focus on compliance, making sure you have your taxes organized and pay the IRS, pay the state tax agencies, and just to make sure we keep you out of jail. But cash flow is king when you're talking about running a business, because without cash, the business is dead.
Is there a particular amount of money or number of months of cash that you think a company should sort of keep stocked?
Yes, that is the most important question that a business owner and partners in a business together have to think about. I say on average, you should have somewhere between 4 to 6 months of cash inside the bank, just in case, as the owner, you get sick, have to be out. The business isn't making any revenue, but you're still able to produce operational costs, keep people on payroll. I mean, a focus of that is, when we went into the pandemic, businesses who did not have cash flow saved up for at least 4 months until things opened back up, either went out of business or they lost, important employees to other companies. And so in realizing during the pandemic, if you didn't have cash flow, you were either relying on the government or you had to go find a job. And as a business owner, that is the last thing that we want to do.
No, we don't want to work for anybody but ourselves, right, Tabitha?
That's right. And so that's why cash flow is king. You got to have cash in the bank.
So are most of the business owners you come in contact with proactive or reactive?
Unfortunately, about 80% of business owners are acting in a reactive state. They're frustrated because they did not have a plan before the disaster or the crisis happened. They may have an employee that got sick and had to be out for several months, and they were relying on that one employee. And so without that employee, they now have to go train someone, find someone qualified enough to run operations or to hire multiple employees. And so having a plan in place, you have your targets, your goals, and then monitoring them goals are very important in order to keep a business afloat.
Tabitha, what challenges do you see business owners facing now as we head into 2024?
So heading into 2024, challenges that I see is that business owners, when they become a business owner, they tend to have an employee mindset. And so they're afraid to delegate. And if the business owner is not producing in the business, they're not making money. So we're in a catch-22. If we're not selling or we're not at the computer, we're not making money. If we're not sending out the invoices, we're not receiving the cash. And so that's one of two of the challenges that a business owner will face. Another challenge is knowing when to add a product or service or when to take it off.
Right.
Think of a restaurant that has a plethora of items on their menu. The challenge is, especially for a patron like me, if you give me too many options, I'm going to leave.
My wife says a confused mind says no. That's
right.
What happens. There's
Exactly.
too many SKUs.
Yes. And so whether you sell a product or a service, it works for both sides of the industry. You have to know what products and services to offer at what time of the year. Especially if you're a seasonal business, you need to know what to put out there at the right time, but you got to have a plan.
We're continuing with Tabitha Holliman of Holliman Strategic Advisors and online at hollimanadvisors.com. Any other challenges maybe with the labor force or with the economy that you can see?
Yes. So another challenge that business owners face is they don't know what's working and what's not working and what is working, whether that's in the morale of the company with their employees. If an employee is not producing at the level that they should be, what do? Do you let go of that employee? Do you offer more training? And what I found to be most productive is to train that employee versus laying off. Because especially if you know that employee have good intentions and they have that intent to learn, to get the skill, to actually, help the business owner make a profit, because that's that buy-in. If the employee does not have the buy-in, then you're going to find yourself with a lot of what we see today where the employees don't care. You have to give that buy-in to that employee in order for them to understand that if they perform well, they get bonuses. They're not just helping the business owner, they're helping themselves, because they're taking interest in the profit of the business. You think back in the day, a person could make minimum wage, but because the company felt like family, they came. So how do we get back to that, but also with higher salaries, but not to the fact to where the employee feels entitled to something they may not, warrant to get. But the buy-in is the most important part of the employee-employer relationship.
Well, one way for the employees to benefit from a good running company is if the business owners have a way, I suppose, to monitor how they're doing. What are some drivers that you preach to business owners on how to maybe track and even look ahead and forecast?
Yes. So with being a business owner, whether there's several partners or a solo or business owner, you want to make sure you catch those key performing indicators. Whether that's KPIs. So whether that's financial, whether that's with your leadership team, your employees, those KPIs can be tracked because they're based on merits. And so when it comes time to give those evaluations to the employees, you want to make sure you're basing it off realistic numbers, and that the employee or the leadership team understand what they're responsible for. I see a lot of times business owners or the employer will say, hey, you're not doing this, but it was never discussed in the first place with the employee. The owner just had expectations that they say, well, I could do it, but they haven't relayed those same matrix with the employee. As far as financials, we definitely want to track our leads, how much we're retaining our clients and getting new clients. If we only dedicate ourselves to our current clients, then we can't grow our business. So it's very important to always have that rotation of new clients or customers coming in and out the door, going to your website. If you're an e-commerce business, you want to focus on the purchase frequency. How many times does one client or customer purchase from you? Is it month to month? Are they coming out once a year? So you have to track that matrix. The number of sales transactions that you actually get for the year. A lot of times business owners don't know how many sales transactions they had.
Right.
If you had 5,000 last year and your goal is to get to 6,000 this year, but you didn't know you had 5,000 last year, so how do you know to set a goal for 6,000 or 4,000? So if you don't know, you may be going backwards in your business. Another one to track is the average sales transaction value. So if your lowest, so say like a construction company, they work for the industrial, commercial, and residential. Their residential average value might be $500. And if that's their goal, that's good. But on a commercial, it might be 6,000. And if you want to increase so that you can hire more people, you might have a goal to increase that to 8,000. Well, how do we increase it to 8,000 without you losing your key customers?
Right.
And so that tracking the average value is one of the biggest things will help you grow your cash flow. So those are the keys that help you get revenue. Leads, whether it's new, retained, the purchase frequency, and the average sales value is what give you your revenue.
How about on the other side, the expense side? Can you cut your way to profitability?
So with the answer to that question relies in what season you're in.
Okay.
Are you in reduction, expanding, or sustaining? A business can only be in 3 cycles. You're either reducing, expanding, or maintaining. And so if you're in the expanding, cutting may not be the best option. When you're expanding, you're either going to take on more debt or you're going to invest more money into your business. Which way is smarter is really going to depend on the goal of the business. But it also depends on the personal goals of the people making the decisions. Because if you're a business owner and let's just say you need a new car, well, do you buy a new car or a used car? If you ask your wife, it's probably going to be a new car. They want a new 2024, whatever. But if you go back to your business goals and you're expanding, then if you buy a new car, that might negatively affect you expanding your business.
Gotcha.
And so we want to look at our revenue. We want to look at our profit margins because our cost of goods sold is the biggest thing that impact our margins.
And before we scoot, as I mentioned, Tabitha is going to be on our panel discussion from 1 to 2 p.m., October the 19th. What nuggets do you hope to share with the people in our live audience?
So the nuggets I hope to share are, those 5 challenges that business owners face today, the 15 drivers that will help you increase your cash flow as you grow your business, and those other, the drivers that just actually touch your cash flow. How many days outstanding are you allowing your invoices to be? 15 day, net 15, net 30, net 45, net 60. Can you believe there are business owners that have a net 60? Especially when they're contracting with governmental agencies. Right. It tends to be that net 45, net 60. And so how do we battle against that net 60 but remain profitable and keep our employees? So I will be sharing about those 15 drivers. They are very important, which lever to pull in order to increase that cash flow. And then just what's next steps? Where you're at now and where do you want to go? How do we get there? And that is creating a plan. So we're going to discuss how do you create a plan for your business.
Now, the other most important question before we go, will you be wearing the white glasses or will it be pink or have you chosen the attire yet? Or?
So if you've met me in the last year, you probably have seen me with my white glasses on. And nowadays, if I don't have them on, people don't recognize me.
Okay.
So you're going to see these white glasses. They're a part of me. They're a part of my brand. And I'm just excited to be a part of the ABD Expo and cannot wait to educate some business owners.
So happy to have you. And again, if you'd like to learn more about Tabitha before October 19th, it's hollimanadvisors.com. Thank you so much. It was great to visit.
Thank you, Neil. It was great to be here today.